Hi, everyone. Welcome to the Getting Sharp podcast presented by Omega Point. I'm Omer CEO and founder of Omega Point, and we've created this podcast to help our investor community quickly understand some of those relevant topics impacting institutional investors in the current market environment. Today, I'm joined by Ye Tian from Theia Insights to provide a view on industry classification and thematic factor models. I think that we know very much that most investors today are really grappling with understanding how their portfolios are exposed to various themes and industry differences in how industries are being classified today. Really, the market itself has become far more complex, right, than simply maybe just what is being described by some of the normal industry classifications. And so we think these issues have definitely been at the forefront of many of our discussions. Many portfolio managers are asking about that. And so, really, to help our investor community make sense of all this critical information, Ye and I will be exploring Theia Insights industry classification systems, factor risk models. We'll really delve into how Theia Insights helps investor understand all these different elements, how to break it down, and examine how these portfolios or various companies are exposed to themes in the current market environment. So with that, I'd like to formally, it's my pleasure to introduce Ye Tian from Theia Insights. Ye, thank you so much for joining me today.
Thank you, Omar. Great to be here.
Wonderful. And I guess, as a starting point, it would be helpful, given that you guys are fairly an innovator and newer in the market with some of the things you're working on. Love to kind of start with asking you just about how you came up with the idea for Theia
Yeah.
Insights, and also what kind of problems are you trying to solve in particular for investors?
Yeah, sure. So, Theia Insights, the name, a little bit about the name, comes from like the Greek mythology. Theia is the Greek goddess of sight. So the idea of Theia Insights is to bring clear sights into dissecting and understanding the very dynamic and complex market. So how we got started is I actually don't have a financial background. My background is in technology, natural language processing. And so a group of us mostly from Cambridge, UK, we were working at Amazon Alexa, a group of us, and then some other technology companies. And we encountered a problem, or when we were kind of doing some consulting, or I was doing some consulting for some financial teams in like index providers, for example, that what the challenge they were facing is that it's becoming harder and harder to thematic indices. That seems like a kind of a small problem or a very niche problem, but if you think about it, it's actually a problem that's prevalent across the whole investment community. Because the idea of to say, okay, tell me all the companies that are involved in cloud computing is not simple as to say what are the companies that are classified by cloud computing by classification system. Because there are companies that are, let's say, Amazon, right? Amazon, everyone knows is cloud computing. Some industry classification system would say it's consumer discretionary or e-commerce, which it is also. And then also, what are all these companies that have they are using cloud computing, but their majority of the business is not cloud computing? So that's the beginning of the problem, because we had a background in natural language processing. We thought there's a better way to build an industrial classification system that isn't one-to-one kind of bucketing system that you have to put one company with one label and be able to really discover what industries and things exist, and for each company, like who does what for how much. So that's the beginning of the genesis of the insights, and we started from there and built industry classification and thematic factor model and a range of application models, particularly for thematic investing.
No, it's a fascinating how sort of a little problem all of a sudden became much more relevant and sizable, right, across the
Yeah.
board. And to your point, it sort of comes to the root of how companies are viewed, right, by not just obviously investors, but the broader activities that they do, how those actually link into things that the community, if you will, the business community, the investor community
Mhm.
calls themes, right? And so I'd love to kind of dive a little bit more into some of these themes that you guys are capturing, and if you can help the audience understand sort of how do you think about a business theme, right? How does it how does it get formulated? Because a lot of, again, what you're doing is naturally doesn't have 1,000 human analysts that are right
Yep.
sitting there and they're saying, hey, you know what, I think this company should be in this theme, or we should have a new theme because I've been reading in the news that there's new that there's something called intelligent farming, right?
Mhm.
So would love to hear how you guys really come about formulating these themes, and if you can give us some examples, of how do you sort of companies map into them?
So this is the first question is like, what interesting themes exist in the first place, right? One kind of traditional way of doing this is that you call up the expert and they say, here, I'm an economist. Tell me what are the industries that's out there. And then like for a simple economy that probably works, an expert will give you kind of the lay of the land in a pretty broad stroke. But if you really want to know everything that exists with the economy as it is now, no single expert or collection of experts will be able to comprehensively and dynamically tell you everything that exists, right? This is where AI comes from. As we know, the best thing about AI is that it's able to read a vast amount of data and be able to process them systematically. So how we started by building the taxonomy in the first place is feed models all of the data that you can find about companies. So basically company filings, company earnings transcripts, business descriptions, even like Wikipedia articles, everything that describes what company is doing, either by companies themselves or by other people writing about companies. So in those articles, you get you basically get lots of raw data about companies describing what they do, right? It goes from broad things like we do health insurance to things that are very specific, like they talk about a particular molecule that they developed for some kind of disease. So then from there, how do you then have a taxonomy of a list of things that are themes? So a natural way of doing that is clustering. So here the key is like what it is that you are clustering, right? You can't cluster companies. If you cluster companies, let's say if you take a company's description and use that as the basis for clustering, what you end up with is naturally that you have to put one company into one group because it cannot belong to multiple. So here you need to first, or how we did it is that we first extracted the key phrases and kind of relationships between what companies, what they're doing and what it is for. So let's say we develop this molecule for curing this disease. So the molecule and the disease then are extracted. And then from there, you have an ocean of kind of isolated, not isolated, but like extracted phrases describing what it is that they do and what is that they solve or product that they produce. And then cluster from that point of view, you have groups of phrases that mean something similar. So you end up with, themes like artificial intelligence or semiconductor chips or, cancer therapy and so on and so forth. So this is what we did, and that we now have a taxonomy that is dynamically updating, but have a pretty stable structure on the top three levels that are similar to like the systems that you're familiar with, like gigs, goes from 10 sectors and around 30 something industries, all the way down to about 250 we call major themes, and right now over 3,000 micro themes. That's where like themes are produced.
Mm-hmm. No, that's very helpful. And I think with that kind of foundation, then it's much, like you said, it's much easier then to be able to say, well, Amazon is cloud, but it's also, within some branch, maybe some thematic branch of e-commerce and other things around that. So can you then help, us understand how then, right, that second step, how then do you then take companies and say, okay, now I can actually help, an investor understand really what the different breakdowns of that company's business themes are?
Yeah. So like once we have the taxonomy, then now the next step is to map companies onto taxonomy with a weight for each of them, right? Kind of traditional ways, like the most traditional way is like you say, what's the primary product or primary case? Then that's kind of gigs and like systems that give you a primary label. There's another second type of method you can do is to try to break down the revenue to say, okay, by their revenue breakdown, 30% is cloud computing, 30% is e-commerce roughly, then we give 30-30. This is it's a very good method because it's explainable. The challenge is that a lot of the companies don't actually break down revenue in the way that you want to. But also sometimes, even if they break down the revenue, so let's give an example of American Express, right? American Express, of course, make money through Amex card, most of the revenue, but it has lots of collaborations with like Delta Airlines, with hotel chains, and then so yes, it's making a revenue from its credit card transactions. But if a lot of that credit card transactions is because of its collaboration with a hotel chain, is that business activity credit card processing or is it hotel chain? It kind of is both, right? Because of the collaboration, it brings you revenue to the credit card processing. So that's the challenges of using revenue breakdown. And then another challenge is that companies could invest heavily into a line of business, let's say quantum computing. And not only that, it might not generate revenue for a very long time, but at the same time, investors recognize that as it gives this company a lot of value. So there, if you don't attribute any industry classification because there's no revenue from quantum computing, you don't capture this investor's perspective that this company is primarily, or have a significant exposure to quantum computing. So long story short, so our procedure or our method is to look at all of its, for companies, public companies, its filings and earnings transcript and extract all of the descriptions about its business activities. So that means its products, technologies developed, the customer groups that they serve. And then from there, you look at the prevalence, how prominent is these descriptions that are related to each of its business lines, right? If American Express, let's say, talk 80% times just about airlines and hotel chains, because that's everything. Imagine if that's a lot of things that's really driving the revenue, then you would actually have a heavier exposure to airlines and hotel chains than it has then to credit card processing.
Mm-hmm. No, that's interesting. It sort of reminds me of, people talk about revenue is the output of the strategy, right?
Yeah.
It's always the end,
Exactly.
right? What you really want to go is to understand the go-to-market strategy and the product development, the R&D strategy. In both of those cases, right, if you can understand both of those, you understand the company far better than just simply looking at the output of the revenue. So what you're really doing is trying to capture more of the upstream activities that they're doing.
Exactly.
And Amex is really interesting point. It's also interesting that, like you said, investors are definitely probably giving Amex, or call it quantum computing company A or whatever, credit for that type of business activity that they're doing that may not be generating revenue, but they're sort of projecting out in the future some kind of a model. And so ultimately, the company is sort of quote unquote trading on, right, or in the markets, there's some kind of a movement sensitivity to those underlying, business activities that are not reflected in revenues. That's an interesting problem, right? Because ultimately, like, you could be saying, maybe the company's saying 80% of the things that they want to say, they also be touting their own go-to-market. But if investors are not giving them credit for it, then maybe there's a way to detect that. So I'm kind of curious to know, it seems like you guys have done some work in that space as well, is to say, all right, well, these are the business descriptions, or the business classifications, thematic business classifications for the company based on a variety of different ways of looking at it. But here's how investors are actually thinking.
Mm-hmm. Yeah. So this is kind of like two sides of the truth, right? Or the reality. One side is like what do companies say? The other side is what do investors think? What do they see? So the factor model that's what factor model does. So factor model, because like our audience on Getting Sharp will be very familiar with factor models, I'm sure. But factor models, what it tries to do is it tries to break down stock movements, right? Explain that into individual factors to separate systematic movements compared to idiosyncratic movements. So what we're trying to answer with thematic fact model is how much of a single company to a portfolio, their stock movements is to do with themes. So let's say how much of NVIDIA's stock movements is because of data center versus AI versus semiconductor. So this factor model, what it does is that it shows you, okay, let's say NVIDIA spent 80% of its filing in 2024, that's just hypothetical, to talk about artificial intelligence. But what we see is that NVIDIA, so this is real data, so as of kind of August 2024, what we see is that what is driving NVIDIA's factor model, what's driving its stock movements most right now is data center and high performance computing. And followed by artificial intelligence. These two actually are driving more of the movements relative to semiconductor, which is still very significant, but not as significant as data center and AI. So this gives a like two view of, okay, this is what companies say, but whether that what companies say is really reflected to by how investors are perceiving them, this is what you can do is you can compare the sensitivity in industry classification versus the factor model, and then you can see whether there's any discrepancy, whether these two are very closely aligned.
Mm-hmm. No, I mean, it's fascinating, right? You need to have both to be able to really get a clean picture, because there could be situations where investors aren't even aware or
Yep.
maybe not spending a lot of time on a new theme that's emerging in the market. So you're finding the new theme, you see the companies are exposed to it, but there isn't sensitivity there yet on the
Yep.
investing side. On the other hand, there could be situations like you said where companies doing a lot of marketing to try to make
Yep.
sure they get out a particular view of what they are in the market, but investors see them differently. Maybe just for the kind of slightly more technical group, and definitely not going into super amount of technical detail here, but just help people understand factor models have been around for a while, right? And certainly, multi-factor models give a sense for this is a new thing, right? This is a thematic factor model.
Yep.
And it's, and typically people think of factor models in terms of, styles and sectors and countries and currencies and various sort of components, right? Of that could be kind of bundled together to give kind of a cross-sectional view of how stocks are moving. Help us just understand maybe what your view, or what kind of unique take you're taking on building your factor model.
Yeah. So, like a thematic fact model isn't not a replacement of traditional fact models, right? You're looking at different aspects of what's moving the stock. So, a style or country, or you are looking at how much how country's economy, country's market is moving the stock. And a thematic fact model is particularly on industries and themes compared to traditional fact model. Like there are industry factors. You have, you got technology, healthcare, and then maybe something slightly more nuanced. We have a particular focus on thematic factor. With the first foundation is that this is based on our own industry classification, which already gives companies potentially multi labels, right? To start with, you already know that you would expect, let's say, NVIDIA to have an exposure from a price point of view to data center. Of course, whether it does or not, it depends on the statistical test. But you starting off, you already know that if you use other industry classification, you might say NVIDIA is only semiconductor. But now you know NVIDIA is both semiconductor and data center and AI and so on, with slightly different exposures.
Mhm.
Now, basically, you want to see if you have this exposure. Um, when you're doing the factor model, you're trying to not only explain then the stock return, but also trying to see if you can find essentially factors that their explanation to the company's stock movements in general are positively correlated with these groups of companies' exposure to that theme. So this is not the same as like you have a bucket of company that is A and company that is not A, right? It's a correlation. So then based on that view, you build factor return series for each of the themes. So that kind of serve as like the pure thematic index for like really seeing what is the return that are just to do with theme and nothing else. And that factor series then allow you to, if you do a regression back, to see the sensitivity of the stock, each of the stock to each of the thematic factors. And then how do we know whether like that sensitivity is a false positive or false? Like you could have, if you have 200, and we have over 200 thematic factors time
Mm.
series, right? And then if you do regression on, if you take every stock and regress to every thematic factor,
Right.
you are going to get some that are significant, that are not necessarily that are not, that's a false positive. What we do by default is we filter out factors that are significant but is not present in industry classification, right?
Mm.
So that's a way to give you a good confidence. However, that signal might be useful. You might detect that some companies, they are, by their business description, they don't have any exposure to something, but they are still sensitive. That might give you interesting signals, like for exploration.
Mm-hmm. And there's ways obviously to provide those as well. It's fascinating, right? There's a lot of really unique and interesting data here. And look, at the end of the day, I think when investors are kind of looking at what they can do with the factor model, right? It's there's so many different use cases of factor models today. So the idea being that I might have my base way of explaining risk, but my PM is asking me, you know what? I really believe I'm exposed to these themes, help me measure that, right? So it sounds like, we can measure the sensitivity of the company, right, at the business level. Okay, there's a business exposure here that we think exists, but here's actually how the company potentially is moving to that. And also here's the return of the theme, right?
Mm-hmm.
Not only just saying like the theme exists, but also companies that look like this, right, return a
Yep.
particular amount when adjusting for all these other themes, right, that exist in the marketplace. So I think it's a very powerful framework. And, we're very excited to obviously integrate that into our platform and provide it to investors to really utilize in their workflows. So I really appreciate your time today and giving us a little bit of an overview of this really unique company that you've built, and helping us really understand how to think about themes in a very quantitative way.
Yeah, thank you, Omer, for the opportunity. It's really exciting to work with Omega Point because you have such a comprehensive and such easy to use platform, and to use that to be able to explore our data and integrate that with other models that you already have is a great opportunity for us and hopefully for your customers as well.
Absolutely. Well, thank you again today, and we'll talk soon.